What helps your insurance as far as keeping your premiums down?
Like insurers are really, they're mandating this deductible.
What are some factors that I can change myself?
It's kind of mind blowing. That's not always the case.
So you're saying
Depends on
that
the
a policy could be. What do you want people to know about the differences between actual cash value and replacement cost that we don't necessarily think about?
The main thing I want to say is if you're the type that is not submitting claims, you should at least look at how actual cash value could save you money and still keep your lender.
Because people don't submit claims because they don't want their rates to go up.
And they're putting all this money into replacement cost insurance when you could save sometimes 40-50% going to actual cash value. It's kind of mind blowing. That's not always the case.
So you're saying
Depends on
that
the
a policy could be, let's say, $1,000 a month to insure a property at replacement cost. You're saying that it would be $600 a month possibly at actual cash value?
or less sometimes, just depending on the age, the square footage, all sorts of stuff, the type of risk that it is, especially. And I know you do a lot of five or more units, but 4 or less units, if that's your portfolio, you should absolutely be looking at actual cash value right now.
Because the rates are better.
Yeah, a lot better. Yeah.
No, why are they better on the 1 to 4 units as opposed to 5 to 50 units?
Well, and there's age factored in that too.
Sure.
But yeah, it's just the way the market is right now, to be honest with you. Insurance has a market just like real estate. And right now the market is, I would invest if was a real estate investor, 4 units or less is where I'd be right now.
What helps your insurance as far as keeping your premiums down? What are some factors that I can change myself?
Well, claims for sure is one thing. If you're submitting claims left and right, I mean, your premiums are going to be high. But then the other thing is definitely taking a look at what type of coverages you have. Make sure that you're working with a broker is kind of the thing.
So what does it mean to work with a broker?
Yeah, working with a broker is like, for me, I don't work for a company. I work for my clients.
So does somebody that works for a country or State Farm different than you?
Well, yeah, and I'm not talking bad about Country or State Farm, but they certainly only have one company that they can.
So they have to use that insurance.
That's it.
Okay.
Yeah, they only, so I have, when we talk about the different coverages, actual cash value and replacement costs, that's all the options they have. Whereas I have those options with, 20 different companies, sometimes more than that, depending on what the risk is. So,
But what can I do I'm very premium sensitive. What can I do to lower my premiums?
newer construction is always the best, but if that's not an option, which a lot of times it's not, it gets expensive to do new construction, making sure that the bones are good. You did a video on the bones. That's exactly what insurers want. That's what my insurers look for is updated electrical, updated roof, updated HVAC. You're golden.
So that's key is the updated as far as the bones. We talk about roof, mechanicals, windows, foundation. That's very important to an insurer's mind as well.
Extremely. And the cosmetic stuff is important actually too. You'd be surprised how, insurance companies love pride and ownership, we call it. So it's important, but the bones is you said it in that video, it can be expensive to do those things if they're not done, in the buying process already.
What do you feel about deductibles? I've seen deductibles. When I started, deductibles were literally at $1,000 for an apartment. This by under. Then it went up to $2,500. Now, in order to get rates, sometimes we do $10,000 in deductible or $25,000 to put that monthly premium down. Does the deductible have a lot to do with the rate? Tell me.
Marginally, it's more of a qualification thing. Like insurers are really, they're mandating this deductible now if they're going to write, especially on 5 or more units built before 1980. That's like the hardest thing to insure right now and get good rates for. But basically they're requiring even a separate wind hail deductible, sometimes 1 or 2% of whatever your coverage A is. So, if you're talking 2 million, that's a $20,000 deductible if you got 1%. But that's what you have to do.
Yeah, what I've seen is there's been a lot of exclusions on policies where it's like, hey, we're going to insure this, but the roof is going to be 3% of what the replacement cost is, or that, which is, the replacement. You might have bought the property for $1 million, but it's replaced at $2.5 million. And so then you have to pay $60,000 there, hey, 2 or 3% of $2.5 million.
Exactly.
And you're like, okay, why don't I just replace the roof just myself and self-insure? I mean, I don't, because I don't want to put a claim.
And then you lower your premiums. Stash that extra money that you saved, when you switch to this type of policy, stash it away, at least half of it for when the roof claim happens inevitably, because it'll happen sometime, and that's just the way I would go about it personally.